Good morning, everybody. This is KFS Academy, and welcome back to the channel. Today, I'll be treating us on candlestick patterns and functions. So, we have 5 important candlestick patterns: the engulfing candlestick pattern, the doji candlestick pattern, the hammer candlestick pattern, the inverse hammer candlestick pattern, the tweezers top and bottom. So from this candlestick pattern, other candlestick patterns are derived: morning star, shooting star, evening star, the haramis. All of them are derived from these candlestick patterns. So let's take all of them one by one, starting from engulfing candlestick pattern. So what's the engulfing candlestick pattern? An engulfing candlestick pattern is a candlestick pattern that is formed by an envelopment of a particular candlestick pattern over another. And we have two engulfing candlestick pattern. We have the bullish engulfing candlestick pattern, and we have the bearish engulfing candlestick pattern. So the bullish engulfing candlestick pattern is formed when a bull candle totally envelopes a bear candle. That is when a bull candle engulfs a bear candle, closes above a bear candle, as you can see in the diagrammatic representation here. And we have a bearish candle also, which is formed when a bear candle totally envelopes or engulfs a bull candle, or closes below the bull candle. That's what we call a bearish engulfment. And I will be showing us the representation of these candles in our charts, in our forex chart. We will be using EUSD to make this illustration, Euro USD. So let's look for a bullish engulfing candle. Right here. Right here. I don't know if you can see my drawing clearly. Let me choose a color that can appear. Let me use dark green to illustrate this. So this underlying section is a bullish engulfment here, right here. A bullish engulfment right here. Right here. You can see that right here. You can see that this candle totally engulfed the bear candle right there, the red candle right there. It totally engulfed it. I'm trying to get this line off the screen. It's kind of stubborn. It's kind of proving stubborn. Anyway, This is a bullish engulf uh, candle pattern, and I will show us the bearish engulf candlestick pattern. Bearish, yes, this is a typical example of a bearish engulf pattern. This is a typical example of a bearish engulfment pattern. You can see that the bear candle closed below the bull candle. That is, it engulfed the bull candle. So this is it for engulfing candles. So let's talk about the doji candlestick pattern. This candlestick pattern right here, you can see where the hand on my screen is placed on, where my mouse is actually pointing. Right here, this candlestick pattern is the doji. So the doji is known as an indecision candle. Whenever this candle appears in the market, it means you don't know if the bear or the bull is in charge of the market. So to determine the direction of the market, it must be supported by either an appearance of a bull candle or a bear candle. So whenever you see a doji and the next candle you see is a bull candle, that is a confirmation that the bulls have entered the market again. And whenever you see a doji and the next candle that comes after the doji is a bear candle, that's to show you that the bears have taken control of the market. A doji candle can come either in green form or in the red candle form. You get, it doesn't have a specific color. The doji candle this is just the shape. So I'll also show you the representation of this doji candle in the chart. Let's look for a perfect example for this. Let's look for a perfect example for this. Mm, mm, gotcha. Okay. I've seen one. Let me zoom up. So this is a diagrammatic representation of a doji candle. Like I said, it can occur in any color, be it red or green. This is a diagrammatic illustration of a doji candle right here. Right here. This is a diagrammatic. But this doji candle has a after the doji candle appeared, a bear candle appeared to show that the bears are back in the market. That's just, I'm trying to show us a live illustration of these candlestick patterns. This is also another example. This is also another example right here. Right here. Sorry. So this, if you can watch this, this candlestick totally appeared immediately. This red candle here, it appeared immediately the doji was formed. After the doji, the red candle appeared. So let's look for another illustration. Here, you can see this candle here, right here, this candle right here. Let me draw a circle around it. This candle right here. So this is a doji, then a bullish candle. After the doji, a bullish candle showing you that the bulls have come back in the market. After a late decision, bulls are back in the market. So the next candlestick pattern we are going to look at is the hammer candlestick patterns. The hammer candlestick pattern. So a hammer candlestick pattern is a candlestick pattern, be it any color, that illustrate that the bulls are in the market. So whenever you see a hammer candlestick pattern, your intentions should be that now I think the bulls are back in the market. I think the buyers are back into the market. So but when trading hammer candlestick patterns, it needs confirmations. When you see a hammer candlestick pattern, the next candlestick pattern to appear to give you a full assurance that the bulls are in the market should be a bull candle. Like here now, this is a diagrammatic illustration of a hammer and a bull candle confirmation. So I will show us in the diagram how it actually looks like in reality. Yeah. This is how it looks like in reality. Just right here. This reality illustration you get. I don't know if you understand. Kind of using some kind of vocabularies to make it easy for us to understand. So this is a hammer, although it has a little wick at the top. This is a hammer, and also this is a hammer. This right here is a hammer. This right here is a hammer. So after a hammer, a bull candle. So this is a hammer illustrating to you that the bulls, that is the buyers, are back in the market. So after this hammer, another a bull candle comes up for a better confirmation. The same thing happened here. After this hammer, another bull candle came up for a better confirmation. So hammers are illustration that buyers, the bulls, are back in the market. So the next candlestick pattern is the inverse hammer. This is just opposite of the hammer. The hammer faces upward, like the head of just the hammer is just like a hammer. Why an inverse hammer is a reverse of the hammer. So some when this occurs in an uptrend, when this occurs in an uptrend, they call it the shooting star. That's what they call it. That's why I said with these five candlestick patterns, other candlestick patterns are derived. So this inverse hammer is mostly when the bears are back into the market. Whenever the bears are into the market, the hammer signifies it. But you need confirmation to really tell you that the bears have gained ground in the market. That is, after a hammer appears, you wait for the bear candle to solidify your confirmation. Let me, yes, yes, here, right here, right here. Can see this. This is a perfect illustration of a hammer being backed up by a bear candle. After this hammer showed that the bears are back into the market, this bearish candle now appears to give you a more refined confirmation that the bears have solidified their ground in the market, back into the market. This one also shows the same thing. This one here shows the same thing. This one right here shows the same thing. After this bearish hammer, another bear candle comes up to give you a solid confirmation that bears are in this market. So inverse hammer are mostly effective in a downtrend. See, all these hammers we talk about, they have where they are mostly effective. You can't just use them anywhere in the market. Some are effective in a downtrend market, while some are effective in an uptrend market. That's just the reality of all these things. They can't be effective everywhere. That's how it works. So I'm showing you diagrammatic illustration and real life illustration for you to find it easy to comprehend, to understand. So the next one we are going to talk about is the tweezers. The tweezers, you have the top and the bottom of the tweezers. So when you see this candlestick pattern, this one right here, this one that have my mouse directly placed, my mouse pointer just on top of it, is a tweezer top. Whenever you see this candlestick pattern, know that it's a confirmation that buyers or bulls have entered the market. That is when a bear candle closed right at the exact point where the bear closed. Like, when you see this kind of pattern, just know that the bulls are back in the market. Let me look for this pattern in a reality chart. In a reality chart, let me see if I can find it. I saw it somewhere around here. Yo, 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 yo. I think this is it. This is it. This right here is it. See, we don't actually need to see the perfect structure of our diagrammatic illustration. The one thing about the reality of this market is 80% of the time you don't really see the perfect structure of the diagram. You only see what looks like it, and when you see what looks like it, it is it. That's one thing about this market. When you see what looks like it, it is it. So this is an example of it, and this is another example of it. And these are the tweezers, tweezer tops. And the next is the tweezer bottoms. It's just opposite of the tweezer tops. Directly opposite of the tweezer tops. When you see this tweezer bottom, which means the bears are back into the market. See, it means the bear candle closed on the same level with the bull candle. On the same level with the bull candle. The same thing with the Twitter top. The bull closed on the same level with the bear candle, not engulfing the wick. The same thing here. This bear candle closed on the same level with the bull candle. And let me show you a real life illustration. I think I saw it around here. Perfect. Is that it? Is that it? Hmm. Hmm. This empty, but I think this is it here. This is it here. I think this is it here. Remember, I said once it looks like it is it. Don't wait for a perfect structure of it before you confirm that. The market 80% of the time cannot give you the perfect structure. But once you see something that looks like it is it. This right here, this right here is a tweezer bottom. You can see that, see where it closed. Just it didn't engulf the bull candle. It closed just at the level of uh, this bull candle, at the level. That's what we call a tweezer. Let me look for another illustration. This is right here, and I know I'm getting it in between candles, but I'm just trying to show you how it looks like. When you It's our next lesson on trend and types of trend. I will now show you where it can be effective. This candlestick representation can be effective. Like I say, these candlesticks, some are effective in downtrend and some are effective in uptrends. They have specific places where they can be highly effective. This right here is a tweezer bottom right here. So all these illustrations are that I drew here. Normally in drawing we make it look perfect, but in the reality of it, you don't just want a perfect candle. You just want what looks like it. And when you see what looks like it, it is it. So this candlestick pattern is what all beginner traders should be looking out for and should be trying to perfect in their trading journey. I don't think big name candles are important. I don't think they are important in the market. Although it is good for some reasons, it is good for you to know all these things. But what matters is for you to master uh, the important aspect of the trading. You see, trading is not all about the amount of knowledge, or it's just all about how you can utilize the ones you already have at your disposal. So in our next lesson, I'll be taking us on trends, uptrend and downtrends, and ranging markets. So look out for our next lessons, and